Heading into the fourth quarter, will we see a push to the upside? Seeing signs for that, and of course I'm seeing signs for a downturn. Who's right? Lots to talk about. Sit back, let's get started. Hello, there's Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget, click show more for additional information and links on today's video. As we approach 20,000 subscribers, thank you all for joining. I want you to know I am a practicing advisor. Everything you see here, I implement to our practice. So if you find value, please do consider subscribing. Obviously, 2020 has been a year we'd all like to forget. Big move down, big move up. Now we're coming down, very choppy. And we're seeing all kinds of political, geopolitical, right? All kinds of things going on right now that can affect the markets. Let's put all that aside, focus on the facts. Today, as always, we're going to go through our charts, look at our signals, have some changes. What's on our radar? What do we see out there right now? Opportunities, maybe some things we should trim. What keeps me up at night? That underlying data. And then we're going to give you a game plan and a couple key points to stay focused on. Let's go to the big charts. First up, let's talk about our process. Just did a video, a behind the scenes video on our process. You have a link here. But the most important thing is it's just not one piece of a puzzle, okay? We're obviously looking at momentum. We're looking at macro data. We're looking at cycles in the overall market. We'll get to that. And last, and the most important thing, is confirmation via the charts. Last month, because I've not done a market update in a month, I called this my most important chart right now. Why? We're going back to 1981. Okay, this is obviously the trend line. We came up against it, right? You can see a couple times. We did again, but like the past, we failed. It bounced off it, and it has now come down. We're down about 3.5% as of 12 o'clock on Wednesday as I record. And you can see the long term. Anytime you have what's called negative divergence, relative strength, and you have a series of lower highs, and you kind of see where the market goes. So that's another thing I look at in the long-term chart. So let's get a little bit closer look of our monthly. And where are you? In this case, I'm going back to 10. So here's our 2010 trend line. And again, you can see we failed and came below. Big time, whoops, let's get that one. Big time negative divergence, right? You have a high, lower high, lower high, lower high on the underlying strength, the oomph that we look for in a market. Okay, from there, is there anything else we see? Well, I mean, down the bottom is momentum, MACD, okay? We are still positive, so because of that, in fact, long term, we are still positive. Okay, so next up, we have our weekly chart, which we're seeing a little bit of a breakdown. Until today, we'll talk about that. But as you see, same thing, right? In this case, I have a weekly chart from 18. There's our top. We failed there. We have come down. For the week as of today, we're up 2.5%. Okay? Now, if I go down here, this is the key. Okay? Momentum, you see the histogram going down. Okay, so overall, we're seeing a decline very close to a negative crossover. Okay, not happening today because we're having this bounce. I'm going to talk about that in 1 second. So as of today, I'm calling this neutral. Okay, obviously, we failed at the top end. We are very much neutral, which is going to show through in our overall market stance. So next up, we talk about the daily, and what do I see here? Obviously, a couple things have happened, okay? We peaked last video This was September 2nd when we peaked, okay? My last video, I said we started raising cash. We were at about 10. We are at 20% today in cash. Now, I will say today, for the first time, because we failed a couple days, the S&P did go above the 50-day moving average. Generally bullish. My problem with this is, as of 12 o'clock, I'm recording this, volume is terrible. Okay, when I look at my large cap and I look at our NASDAQ holdings, we're talking about 30% of volume versus yesterday. So you look for that, right? Price, volume, and then, of course, we'll talk about my favorite, volatility, okay? There's your volatility index. So what's important here, our trend is 25, okay? We go below, we're going to start adding equities, okay? 25 to 30 is the chop zone, and that's exactly where we've been for the last couple of weeks, okay? So right now, again, if you go above 31, uninvestable. 25 to 30, we did pop up there last week. We got to about 30, and that's why I said, you know what, let's just pause and see what happens. Just like the weekly view, I'm going to say neutral. Now, if I come down here to momentum, it is coming up a little bit, if you can see over there, almost a crossover, but let's see. I'm not convinced that's going to happen. Today's Wednesday, as we say in the business. Friday matters most, okay? And you can kind of see that this is a short term with a blow up of the overall histogram. Sorry, let me go back there. Okay. But again, the full market still is not performing. This is the NYSE, right? So the full market, and you look here, we're still about 8-9% from our all-time highs. Now, the NYSE has not gone back up above its 50 yet, so I continue to watch that. And here's the biggest thing. I put this out on our social media the other day. I've talked about this frequently. Okay, the black line is the NYSE. The histogram in the back is new highs minus new lows. Okay, today, 51. 51 new highs minus new lows. It's just not there, folks, okay? So it came out today once again. Our boy Munchin talked about making a deal, which is really driving the market. The other thing is, it is a very narrow market. Who's up this year? Of course, we know tech is up. Sure, we're in tech. Next on the list is treasuries. Now, I don't have gold on here because this is what I'll call a typical asset allocation model. But look at everything that's still down year to date. Small caps, double digits. Mid caps, international, emerging markets, large cap value. So it is a market of haves, the fangs, and have-nots. Okay, so the last thing in this section, I'm going to talk about something. I believe I brought it up before, but it's the put-call ratio. Okay, put is protection. Okay, call, you're buying call options, looking at the market going up. So what I look for is the actual ratio. So it's obviously put divided by calls. We've had a spike here as things went down, right? We were in a ton of complacency, and things have shifted, okay? As of yesterday, I'll have Andrew bring this up because I don't have it on a chart. The NASDAQ has its second largest short position in history. Very interesting to see that. So let's talk about bonds and what's going on here. Not much of a change from last time. Not surprising because where we are in this cycle, we still like bonds going forward, right? Each time we've looked, we've had some really good buying opportunities. High, lower, high, which is good. And then we capped out down here, but we're kind of meandering along right now. We're about 63 basis points on the 10-year. Right now, our low end of the range is only 0.62. Let's see what happens going forward. Now, let's go to Sector Spotlight. In our setup, we talked about a couple key points that I'm looking at right now for market direction. The first one is the US dollar. When we're in cycle 4, we're long the dollar. In cycle 3, we are short the dollar. Down here shows commodities. Why? I'll have Andrew bring up a quick chart. It shows you the correlation, how things work together between the US dollar, S&P, gold right now, 0.98%. So although this is not updated during the day, US dollar's up today, gold's down. That's how it works in cycle 3, not 4. So this is real important to understand. We bottomed out here, as you can see. Okay, we broke our trend. All right, I started cutting all of our inflation assets. I'll talk about that in a second. And right now, again, neutral, just like I was in the market. And this is one of the reasons, because the dollar's not driving decision right now. It's kind of in between. So let's look at some of the things we talked about in the past. So you look at copper, okay? Copper obviously had a big run, consolidation, went up, and then we're back in consolidation mode. Cut our position here in the last month as the dollar started going up. The other big one we've talked about for quite some time is gold, okay? So what's going on with gold? As I said, it's not correlated at all, negative 0.98%. Gold is still one of the top performers year to date. So when we got up here, as I mentioned in our last video, we actually cut our position in gold probably in half, okay? Came back down, and then I started adding again. We're back to about 10%, which is considered a max position for us. So what do I like about gold right now? Well, there's a couple things. One, we can see RSI pointing up, okay? Momentum, excuse me, get rid of all those. Momentum is starting to come up. I like that. And then again, volatility, right? It's not just in the overall markets. We have gold volatility kind of floating along there. Hopefully it's going to start pointing down. But even at 22, I do like gold. I would anticipate if we get down to 16, you're going to see that really starting to surge. So I like gold for a couple reasons. One, it works in cycle 3 and cycle 4, but we still have to be careful. This is a monthly view of gold. We did have a breakout, okay? And we're kind of testing it right now, not surprising. So I don't just look at one chart. I'm looking short term from a trading standpoint, but if we break trend, that's going to change my opinion as well. Consumer staples, same thing with a lot of things I did last month. Look at that run we had there. I sold, cut our position in half, kind of floundering around. We are coming up, broke to 50. Obviously, with everyone being home, consumer staples, these are things we use every day. Continues to look good. We have some upside, so I'm looking to add to that. Just added back into the REITs last week, okay? These are traded REITs. Bought actually down here when it broke some trend, started coming back up, so I do like it. Do not have a full position. Again, because of where we are, I may not go in a full position. I could start at 2%, 3%, whatever, and then add to it. So for me, I bought down here. I want to see it break above, which is a lot of resistance there, before I add some more, because clearly you have a lot of upside right there. So next, I'm going to talk about something I've never done before, okay? We're in cycle 3. We've talked about that. I'm going to get to that in a second, okay? But even though we're in a slow, high inflation, deflation, stagflation, whatever you want to call it, there's other parts of the world, not a lot, that are in growth mode, which would be cycle 1 or cycle 2. China is one of them, okay? Today, again, they had more good data, economic data that came out. I was in China internet. I got out of that mainly for political reasons, what's going on. But hopefully, it's kind of been bleh, really, right? Hasn't gone much for quite some time, but it is hopefully going to build a base, which it did right here, and work its way up. We'll see. Not a full position. I think we're about 4% right now. But I do like the way it's starting to set up. And like everything, it does have some potential upside. Next, what keeps me up at night? Let's go. All right, what keeps me up at night? Well, let's start with a little bit of a joke. Our friends from Hedgeye. I have superpowers. Yeah, but you know what? Pal's got a printing press. Ain't that the truth, right? If you have not seen my video, I did a series on the Federal Reserve, two-part series. I'll have link 1 and 2 up here. Really good. Hopefully will provide some insight. So here's the thing though. When you look at last year, okay, this is in the fall when we had some hedge funds having a problem. Then this is the $3 trillion we added, okay? I talk about this in the video, but they really front ran what's going on here. But what do you see? Guess what? Nothing. They stopped. Quietly stopped. This is the overnight purchase program, which is liquidity, okay? Where they're buying bonds and cash and mortgage backs, etc. And what's happened to the market in the last month? Well, nothing, okay? It is, and I've said this a bunch of times, a direct correlation between Fed liquidity. This market is juiced by the Fed, period, end of sentence. Our guy Powell and Munchin, who came out today and trying to pump up the market saying we're close to a deal. So have to continue. This is point number 2, the dollar, and we have to watch the Fed to see what happens because not going to do details. This was in the most recent video. Despite, right, the blue line is the Federal Reserve balance sheet. So they're pumping all this money. Where does it go? Okay? This is what's called money velocity, big time down. What that means, it's not going to you. It's not going to the consumer, right? So it's not really helping the overall economy right now. That's a problem. Check out the video to get more details on that. So with what's going on, unemployment continues to be the #1 issue. Now this was last Thursday, okay? Comes out every Thursday morning. You know, a couple things. We seem to be, 870 is the regular number, then you have to bring in the PUA. Consistently about 1.4 million, which is not a good number. The only good thing last week, the overall ongoing number did drop. Said this 2 months ago. I think we're going to flatten out about 25 million for a while. Why? Well, you look at Disney yesterday, 28,000, 12,000 for this person. You know, as everybody's money is starting to run out, meaning PPP money, you're going to see more foreclosures and all kinds of issues and more layoffs, especially corporate layoffs, right? Because sales are down, profits are down. How do you fix that? The only way to do it is to let people go. So we are going to closely continue to watch that. So if we're not working, this shows you 2 things. Loans, 90 days versus new mortgages. So we continue to see loan delinquencies go up. That is not a good thing. And this is facing eviction. This shows every state, kind of looks like the United States, and what percentage are unable to pay rent and are at risk of eviction, okay? Maine, 35, Florida, 41, Delaware, 31%, okay? So across the board, the lowest number I see is about 29%. Evictions. This is an ongoing problem. We have to continue to watch this. So I'm going to finish up with the cycles, and I'm going to explain why. As I've said, cycle 3 is where we've been. Growth slows. Inflation accelerates. The Fed's been neutral, right? That's why the market hasn't gone anywhere and the market's stagflate. I am definitively seeing signs of cycle 4. Today's a classic cycle 4 day, by the way. Growth continues to slow, inflation decelerates, and Fed becomes more dovish. Now, if you remember, and especially in the most recent video, by the Fed pumping all that money in, it's devaluing the dollar, which doesn't help anybody because your purchasing power gets destroyed as well. So those who don't have a job. The other thing I want to point out, just in case, I think we're going to go there, but back in 2000 with Gore and the whole Chad mess, okay, it went into a definitive cycle 4, and in that case, bonds, gold, silver worked very well. High beta, high risk did not work at all if we have something coming up here to the election. So what's next? Game plan, okay? Take profits. Raise cash. I've been doing that for a while. Cut your dogs. Definitely a good time, especially if you have non-IRA assets. The dollar and the Fed, right? Those are the 2 things I'm looking at right now. Where is that dollar going? What is the Fed going to do? Are they going to pump in? Are they going to stay on the sidelines? Then, without question, a big part of our process is the volatility index. Below 25, we will add. 25 to 30 is choppy. Okay, plus 31 is uninvestable. And know that as of today, the NASDAQ is at a 34 volatility. So as always, for daily updates and whatnot, just follow us on social media. Thank you so much for watching. Michael Loftus, Wealth and Wisdom TV.